Hi, and thank you for watching us here at Tax Talk UK, where we talk about all things tax and consider other important aspects of working for yourself, being self-employed, running a small business. So today I'm going to talk through some of the items on a profit and loss account that you might see, namely the cost of sales, purchases, expenses, overheads, and talk through what these things mean. Before I do that, if you're new here, please do take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you need to, as well as being able to find other information that we have on a whole host of different topics, all aimed at supporting you in your self-employment, running your small business. So back then to the items on the profit and loss. And the ones that we're going to be focusing on particularly today, following on from lots of questions, is how do I know whether something is a cost of sale or an expense or an overhead? What do these terms all mean? So the first thing to say is, as with lots of things in accounting, in bookkeeping, in tax generally, there is often several different ways of describing the same thing. So sometimes some of these words that you might hear and think, oh, I don't know what that is. It may be actually it's just a different name for something that you do know. And of course, that's the same with lots of things in life. So it's just being familiar with the different terminology for the same things. So generally then, the profit and loss, what we're looking for is a statement of the income and the expenditure for a certain period of time for the business. So it shows us what the company has had in, the sales, the revenue, the turnover, all these terms mean the same things. And then what allowable expenses, sort of have been made against those. So such as your purchases, your cost of sales, all the things that all the expenses that you incur, all the costs that you incur in running that business to be able to achieve those sales that you've made. And broadly speaking, what's left is your profit. And apart from if you have any adjustments to make to that, that is what is going to be relevant for tax purposes. Bearing in mind that we're expecting our audience are all sole traders, very small businesses or micro entities. So there's only going to be, sort of very sort of basic adjustments, sort of capital allowances and that kind of thing. So looking again at the end and what we're aiming to achieve, the important thing to remember is for accounting purposes for your self-assessment tax return, perhaps slightly different if you're a micro entity, because you will have other things to potentially consider. But in terms of sort of very broadly speaking, all that we really need to know is what your profit is to be your taxable income pre any adjustments. So a lot of the information that goes into the profit and loss is for your accounts and for your information internally. Certainly, if you are a sole trader submitting the self-employed section of your tax return, and you are only required to submit the short return, you simply have to know your total sales and your total expenditure. So this is where people can become confused when they're trying to compile their accounts, perhaps in your Making Tax Digital software, and getting confused about where do things fall. So the easiest way to think about this is to start with generating a profit and loss for your business if you're using software in your software, and looking at what that looks like. And if you're not using software, then you can also do this manually. You're just going to document what your sales are, a breakdown of your cost of your sales and your expenses to come up with your taxable profit. So that's what you're trying to achieve. So it's always easier to think what we're trying to achieve and work back from there. So the first thing to establish is how much information do you need to have for your tax return, and sort of work back from there, because sometimes the information that you need for your tax return won't be sufficient for your financial management of your business. So going back to that example, a sole trader only needing to submit the short self-employment return only needs to declare on the tax return the total income and the total expenditure. Well, firstly, if you have an inspection from HMRC, you will need to be able to demonstrate to the inspector how you've arisen at those figures. So you will need to have a breakdown. So you can't just pluck that figure out of thin air. You'll need to know what are those expenses made of. So even though you only need that level of information for your return, it's still prudent, no matter how you're compiling your accounts, no matter how you're carrying out your bookkeeping, that you construct a basic, at least, profit and loss. So that will show us the, as I say, the income of the business, the sales, the revenue, the turnover, and then the expenses to show the profit. Now, where we get the terminology of the costs of sales, the purchases, the expenses, the overheads, this is a further breakdown of the expenditure side, as it were, of your profit and loss. So for example, a cost of sale and purchases they're sort of one and the same. They would sort of fall in the same section of the profit and loss, and you take those off of your sales to give you what's called the gross profit. And again, if you have a slightly larger business or enterprise or company, then these terms will likely be familiar to you already, and they will become sort of more important as you manage your business financially moving forward. These are terms that will become more relevant for you. So the easiest way of thinking of it is, if you had no sales, you would have no cost of sales, and therefore is that cost crucial to the sale. So for example, if you're buying and selling goods, when you're buying those goods, that would be a cost of the sale that ultimately made that sale. So if you didn't buy that item, you wouldn't have that sale. So that's sort of one way of thinking of it. And then moving down to overheads or expenses, again, different terminology for the same things. A way to think of this is, if you weren't actually making any sales, you would still incur these costs. So you would if you have employees, you still would have to pay your employees. If you have premises, you would still have to pay your rent and your rates. Your phone contract, you would still have to pay regardless of the level of sales that you make. So this is one way to sort of think of items that fall in sort of that category, would be if you weren't making any sales, that you still would have to pay those things. And sometimes on a profit and loss, you may also see direct expenses, which are not cost of sales in the way that they link directly to a sale. But if you weren't sort of trading and trying to achieve those sales, so advertising would be a key one that would sort of fall within in that sort of bracket. So potentially, if profit and loss is all very new to you, the things that I've just talked about are going to be completely overwhelming, and you're going to be sort of like thinking, oh, I have no idea. It's really, really confusing. So what I would say to you is, again, going back to what I said at the start, think of where you need to get to, and then think about what information that you need, and then construct your profit and loss account accordingly. So firstly, you want to be able to extract the information that you need for your tax returns from it. So you need to know for that what level of detail that you need. But sort of beyond that, a lot of it is going to be for the management of your business. And sometimes there may not be a right or wrong answer to where something fits. So if you imagine somebody may say, I have a vehicle for my business, where should I put the fuel? So ordinarily someone may consider that an overhead or an expense. If, for example, your business is, if you were a courier or a driver of some type, then that may be your cost of sale. And what I would say to you is try not to get too hung up in exactly where you should be putting stuff. The important thing is that the profit and loss that's generated, you understand. And then the crucial thing is, however you decide to analyze something, is consistency. So if you determine that something is to be a cost of sale, and you sort of don't feel very confident whether other people may agree with you, then the important thing is that you consistently always allocate it in the same way. So particularly if you're using software, and ongoing, you're allocating your expenses to certain categories, it's really important that you're consistent with what you're doing, and that you always do the same transaction to the same category, and you're not sometimes allocating something as a cost of sale and something as an expense. So carrying on with, if you're using software, another time this becomes important is if you have the need to set up a new category in your chart of accounts, because you will need to be telling your software, whichever software you're using, when you set up a new category, your software needs to understand where this needs to fall. Is it a profit and loss item? Is it a balance sheet item? And if it's a profit and loss, where does it fall? So if you set up a new category for expense, for example, your software needs to know whether it's a cost of sale or whether it's an expense. And this is the reason that it needs to know, because ultimately, when you allocate transactions to that category, the software needs to know where it's going to go in your reports. Now, obviously, the crucial thing is that it's correctly going to the profit and loss or balance sheet, because making a mistake in that will impact your profits that you're looking at. And if you report that profit, it will mean that it's not correct. So that is the crucial thing to understand. But if you understand that it's a profit and loss item on the expenditure, and you inadvertently put it in the cost of sales or the expenses, then yes, it may skew the information if you were benchmarking with other businesses. But as long as you've always done that, when you're comparing your own periods or years of accounts, then you're going to get a consistent overview, and it's not going to affect your profit overall, which invariably will be a basis for calculating your tax liability. So I appreciate it can be very confusing, but the thing is to simplify it and only go as in depth as your business requires you to. So just because somebody else has a more complex or a bigger business and they need to have more detail, doesn't mean that you have to follow that suit. You need to do what's correct for you. And to my mind, it's far more beneficial to you as a business owner, to the financial management, that you understand the profit and loss and you understand what's impacting that, and you're able to identify trends in your profit and loss, than having something that looks very fancy but you've got no idea what it means. So so hopefully that helps to explain that quite often the different terminology you hear will just relate to the same things. That when you're looking at your profit and loss, you'll have your sales, turnover, revenue, income at the top, all the money sort of in, and then coming off of that will be your expenditure. And it is as a basis and as a basic principle, it would generally be categorized into the cost of the sales and then the overheads. And the reason that this happens is because that allows you to know what your overheads are, i.e. what would happen if you didn't make any sales, and therefore you need to know the minimum amount of income that you need to earn in order to cover those expenses. So that would really be the main reason as a small business why you would want to have that information. So so I would say to start with that sort of very basic, very sort of broad categories. Try not to overcomplicate things. Just, you know, sort of just be able to get the information that you need, and you can always build on that as time goes on. And of course, if for some other reason you do need more complex accounts and you're feeling a bit overwhelmed, then, you know, by all means engage the services of somebody that can help you to sort of construct your chart of accounts, or potentially sort of help you you know, with the financial management of your business. But just because you're feeling, actually, I don't understand for it to be so complex, I only understand basic, it may well be that basic is all that you need to do. So hopefully this helps to explain a little bit, and helps you to understand the different terminologies. So thank you very much for watching. As I mentioned earlier, please do make sure that you subscribed to our channel. If you find the content helpful, then please do like the video, because that helps us to understand which topics. We do receive a lot of questions, and it helps us to understand what topics are interesting to the most people. And do feel free to ask questions, comments. It all helps us to as I say, to learn what is the most helpful, what information people want to know. Thank you. Goodbye.